Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Well, it's a Tuesday morning. Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Markets looking a little better overnight, but the tariff news flow still continues to come in thick and fast. I'm Prashant. With me, my colleagues, Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks. Yeah, I guess, apart from flows and earnings and everything else, it's just watching who's putting what tariff on whom and who's calling out what. And now India's in the mix because there were some statements last evening as well about how India has very high tariffs. So, yeah, those are the headlines.
Well, that's right. And in fact, I think tariffs and central bank action is going to be crucial to track from here on. So, hopefully, there is some kind of novelty and, hopefully things stabilize, because otherwise you don't want to wake up to uncertain news on a day-to-day basis. And clearly yesterday, our markets were spooked.
Spooked and how, right? Absolutely a smackdown. So, we'll have to start with tariff, not price action, because a lot of the news in terms of tariffs came after U.S. markets. And this is essentially, I'm starting with the 25% steel and aluminum tariffs, which President Trump, the U.S. President Trump, spoke about over the weekend. That's a reality now. He signed that order. So 25% tariffs on steel and aluminum imports from the 4th of March is what's come through. As we said yesterday, the countries more impacted are Mexico, Brazil, even countries like Korea, etc., but not too much. Nothing. Of course, there is some steel which goes from India as well, but nothing really. The implications not there. Now, meetings over the next 4 weeks, according to a White House official, are also going to be focusing on cars, pharma products, and chips. Not the eating variety, but semiconductor chips, right? Now, that's, of course, in the future. So it kind of leaves the door open. More and more, the realization is that with tariffs and, the Trump administration is not one and done. It's kind of going to be like this rolling thing. That's how the policy will be conducted on tariffs. A steady state of negotiations, some taken back, some put. So that's what we should expect. At least that's what we are seeing right now. Now, this is the comment which I think came this was a comment made to CNBC, our network. Now, Kevin Hassett is Trump's top economic advisor, and he said that India's enormously high tariffs block imports. And we were talking about this during closing bell, that this was older data, and we'll maybe put out some of those numbers as well. The new data, I've not seen new data, but this is older data. If you just look at, the average tariffs on U.S. imports into India and take a look at average tariffs that U.S. imposes on Indian imports, India, of course, stands out, along with a country like Thailand, which also stands out. And that is essentially what I think these comments really refer to. So, and I've been saying for the last few days, this is the reason why that meeting with Prime Minister Modi and President Trump, that's over Wednesday and Thursday, will be very, very important, because I think these things will come up. And of course, a lot of these comments, of course, are also being made ahead of that visit to put pressure that, well, it's a negotiating tactic as well, starting gambit in that sense. And then we'll see what really comes off there. Now, overnight, U.S. equities were higher. Nasdaq was up about 1%. Tech did well. The large cap Tesla, for example, was up about 3.5%. Dollar index absolutely flat, nothing, 108.35. I think the yields 10-year was absolutely unchanged as well. Oil prices went up 2%, $76 a barrel. And gold is what else but hit a new record high once again. This is Ukraine's envoy who said that they will present peace options to Trump in coming weeks. So there's been this Munich Security Conference, and there have been some people who've been saying that maybe a solution will be found there, will be announced this Friday to the Russia-Ukraine conflict. But we've not seen any proposals out there, at least in public, which seem to be acceptable to both sides. So how will this happen? So this comment should be read in that light. Just to tie in the levels here, it's been tough, and the market yesterday sort of came off pretty sharply. Now, the 20-day moving average was defended. We didn't break that, so 23,304 is that number. We left off at 23,381. So that's the first kind of downside level, which the market hopefully will not break. But if it goes a closing below the 20-day, which is 23,300 roughly, will open up downsides to the 23,176 level. That's a 61.8% retracement of the rise. Number we put out yesterday as well, but didn't come into play. Hopefully not. On the way up, the resistance is 23,700 to 23,800. This is the broad resistance zone from here, about 400 points away from where we left off. Nifty Bank closed lower yesterday, but relatively outperformed the Nifty. Support comes in at two levels, 49,703 and then 49,569. These are levels on the downside, and then it needs to break the recent high of 50,642 for we to be talking about higher kind of levels. So that's where we are at right now. I think with India, it's not just general tariff noise. There is India in the mix as well ahead. And of course, we've got this visit in the US. I think we'll hear more comments from US officials. I don't know if you hear something from our side, but I think that's going to be top of mind. And that's not just important for equities. It's important for the rupee, the currency as well, which, of course, did a big U-turn after hitting 88. It just completely reversed and recovered pretty much all the losses. So GIFT Nifty, quickly take a look at where that is at. It's about 16 odd points higher. So absolutely undecided what it wants to do this morning. Should we?
And Prashant, as if the tariff noise was not enough, there's Sam Altman and Mr. Musk. They're going at each other saying who's going to go out and buy X and who wants to buy OpenAI. So there's enough entertainment. And by the way, geopolitics, if that's your area of interest, that now there's a deadline on the release of hostages in Gaza. Mr. Trump has said that if it does not happen by Saturday, this Saturday, all hell will break loose. So, we're living in an extremely volatile environment at this point in time. On tariffs, let's get to the Asian market reaction. And the reaction is on the downside. There's a fair amount of caution in markets as we're taking a look around the region. So for the time being, most of the markets have a tinge of red. Hong Kong is down about 0.2% or so. Mainland Chinese markets are down a little more, 0.3% thereabouts. Singapore is also cooling off after its recent surge. Now, on tariffs, just a couple of points that, what are the numbers really saying? The numbers are interesting. It's not like steel imports in the US have surged and gone through the roof. The data that CNBC pulled out over the last decade shows that steel imports are actually lower. They're down about 35% between 2014 and 2024. On aluminum, maybe the concern is a little more real and genuine because aluminum imports have gone up by about 14-15% in that same period in the last one decade. Anyway, they've come through. So the key countries that get hit, again, Canada and Mexico this time around. So the biggest steel exporters to the US are Canada, Mexico, followed by Brazil, the top three. And for aluminum, it's Canada, UAE, and South Korea. So, then we talk about more Asian countries that get impacted. The fact is that, other markets like Vietnam, Japan, along with South Korea, obviously, have been exporting a lot of metals into the US. Now, Vietnam, the argument is always whether it's Vietnam, whether it's sort of Chinese metal being routed through Vietnam or whatnot. But anyway, these are the markets that, have reasons to worry. And that's one of the factors why in the currency markets, while, of course, the Canadian dollar has been quite slammed, the yen, from our Asian context, the yen has weakened a little bit against the dollar, as well as the dollar continues to rise higher. Now, that's the global backdrop. But again, the India-specific question here. This is all today's headline, but the Indian market was underperforming big time yesterday, even when other markets were actually holding their ground. Whether that gives us a bit of a leg up because we had our share of the correction yesterday or not, who knows? But the correction is of a very different nature. Highly valued, richly valued stocks are being sold like there's no tomorrow in the Indian market. There's a lot of unraveling in the mid-cap arena that we saw yesterday as well. And there is no let-up in the FPI selling as well. So we have our own set of issues and problems to go over aside of the tariff headlines. And FPI selling, the numbers are on your screen. Again, 2,460 odd crores of selling that happened from foreign institutions yesterday. Domestic institutions bought but didn't offset the entire number. 1,500 crores of buying coming in. Speaking of domestic institutions, today we will get the mutual fund monthly inflow number. Till now, that number has been that shining ray of hope for our market. Let's see what the numbers say. They'll be out somewhere between 12 and 2 p.m. this afternoon. So we'll keep an eye out on them as well. Lots of stocks in focus as we're in the fag end of earnings season. Just to quickly run through Apollo Hospitals, I thought let's start with the best because, hospitals have done well in this quarter and Apollo is no exception. Margins have gone up, revenues up 14%. Eicher Motors, I think we'll have to go into the details. It's a slightly mixed bag. Margins are under pressure for Eicher Motors year on year. The revenue's fine. Revenue's up 19-20%. Nalco and Hindalco, of course, we'll have Nigel tell us more, but it seems that those aside of what the numbers are doing, it's a lot of this tariff, talk, which perhaps is going to play a role in terms of sentiment. And Bata, consumer, we all know, absolutely flat. Nothing's happened for Bata in the quarter gone by. But there is a margin expansion. They've managed to somehow, boost margins. So let's see how the market will read into this. But I think to begin with, we have to get through, Nigel, this whole tariff talk, dollar, and the fact that our own market is falling under its own weight.
Well, that's right. Yesterday was a particularly disappointing trading session because we had reason to actually at least see a relative outperformance, but we underperformed yesterday. So that was a bit of a problem because we didn't go ahead and conquer the 23,800 mark, which we appear to have, got in our grasp in the last few trading sessions. One positive is the RBI, they are looking at liquidity and they're infusing more liquidity in the system because they have doubled the OMO purchases from around the 20,000 crores or to around 40,000 crores. That's positive. They indicated some measures could be coming, and that's one of them. So I'll keep banks, financial institutions as well on my radar. The next one is the sensex weekly expiry plays out. So that's going to add some kind of volatility as well. We'll keep an eye out on that one. The FIs, what did they do yesterday? They added close to 10,000 short positions. And now, in fact, they have been taken their short positions to around that 1.7 lakh contracts on the short side. It came down to around 145,000 or thereabouts, and then it's increased yet again. If you pull up a chart, that'll tell you the picture out there. From around 150,000, it's gone back to the highest that we've seen in the recent past. And remember, at these levels, normally you see a bit of a turnaround. So we'll keep an eye out on this factor as well. This is one factor that the bulls will be betting on. The other factor is the PCR has come down to the lower end of the range. So normally at around 0.65, 0.7 is when you see a bit of a bounce in the markets. It's come down to around 0.75 odd because the call writing was very, very aggressive in yesterday's trading session. You had the 23,400 call that saw a big amount of open interest build up. The premium was there around 150 rupees. And the 23,100 put as well, fair bit of open interest build up out there. So going by the options data, on the upside, the 23,550 mark becomes the important resistance level, while on the downside, the 23,000 mark is what you're looking at. However, you don't want this 20 DMA to break. And in yesterday's trading session, the one positive was we managed to defend that. So the structure of the market is a little bit weakish, but don't rule out a counter trend rally. Why is that? One is because of the FI net short positions. The PCR has come to the lower end of the range, and you have a crucial support zone as well at around the 20 DMA. The other levels that we are tracking, well, the recent lows are important. So that 49,800 mark becomes important to track on the downside. Otherwise, the risk is that we drift further down. So yesterday's session was a bit disappointing. The bulls will want to bounce back today. And there are some various factors that could support a bit of a bounce if we do move into the red. The 20 DMA, extremely important on the Nifty.
Absolutely. So let's see if we can, maintain some of these levels. Let's get started then. Now we've got the equity call coming in. Venugopal Garre of Bernstein believes that small and mid caps, especially small caps, see several risks that may cause further correction. He says as foreign outflows stop and domestic reallocation is behind, a recovery should emerge in the second half. However, he doesn't see a reason to actively bottom fish in small and mid caps right now. He says this reflected in their decision not to position a separate small and mid cap portfolio this year. He says the selective buy call on large caps stays. He adds that sharp corrections in small and mid caps, however, will likely offer opportunities to resurrect a dedicated strategy later this year. He says their view of macro bottoming and selective buys with positive returns for Nifty stays. He does not expect small and mid caps to outperform large caps.
So basically no hurry, and that's the essential point. So don't be in a hurry, go all in and keep dry powder because opportunity, it's that kind of an year, at least it's turning out to be that kind of an year. The go-go phase seems to be now firmly behind us, especially in the broader markets.